Morning. Morning, Larry, Don, Dex, Sergio, PD, Sledge, Brian, Craig. Good morning. Got my turquoise monster here. It's the mango flavor. You can kind of see the orange outline a little bit and the black. Anyway, it's a turquoise can, not a hey, Goose and Roggemer. Good morning. My voice sounds a little weird to me this morning. I'm sorry. Allergies still trying to take me down. Anyway, probably get over it here in a week or two. Whew, man, all sorts of news. The market kind of, I was biased bullish yesterday. If anybody remembers, that was kind of like where I left it. I was like, I'm a little bit bullish, but we got to prove it. We got to break out above that resistance. That's kind of what we did. We moved up. We have greatly increased the odds that we're going higher. It has not, this is not the all clear at this point, but things are looking pretty good. Pretty darn good. I'm pretty happy. I am still bullish bias. I mean, and there's a minuscule at this point, minuscule chance that we go down and make a lower low. All right, something I want to talk about today. Let's share the screen. Look at this chart right here. This is off a Bloomberg terminal. I don't have one, but I have friends that get me cool charts like this. So this 30-year mortgage rate compared to the 30-year government bond rate. You can see this was, I think, Friday, 5th, 5 days ago, Thursday, Friday. Anyway, 30-year bond rate, 4.97% last week, and the 30-year fixed mortgage rate, 7.49%. Now, in the chat, does anybody know why the 30-year fixed runs like 2.5 points higher? Anybody? You got that? I'll give you a moment to, we'll circle back to this in a minute, but anybody have an explanation why the 30-year fixed runs somewhat higher? Now, that's not always the case. I mean, we kind of dip in and basically touch, but a lot of the time, the 30-year fixed runs higher than the 30-year government bond rate. And there's a good reason for it. I didn't really understand myself until just recently why banks price the mortgage rate higher than the bond rate. So, you just go ahead and explain it in the chat. I'll circle back in a minute. Now, some of the interesting things we have going on now. Let's keep this in perspective here. We're in October. We're coming into the 10th, so we're kind of entering we're getting close to the middle. 5 more days will be the middle of the month. You draw an imaginary line down this, and we're in the middle. Now, this is 20-year historical seasonality right here. This is take the last 20 years, average up the move for the month. This is just based on the day. Like October 1st, we usually move up or down this much, and it's accumulated here. It's on a percent basis. We're hanging out right in here. This is historically one of the most bullish 3-month periods. I mean, it probably is the most bullish 3-month period because right back here is just kind of like a 2-month period right here, March to April. So October through the end of the year, typically one of the most bullish. Now, does that mean we won't see volatility? No, I mean, it doesn't mean that at all. Does it mean that, that we won't see a pullback, that it has to go up? No, it doesn't mean any of that. But average in the last 20 years, historically, this is the bullish period of the year. Now, periods like 2018, we went down, and that's all averaged in here too. So, what are you going to bet on? You're going to bet on that this is a typical year or an atypical year. So, and then maybe like, but what about NASDAQ? NASDAQ pretty much shows the exact same thing. All right. And then if we look at VIX, VIX shows elevated, which we are right now, and it drops out toward the end of the year. Just keep it in mind. It's probably not wise to be buying VIX right now. It's probably not wise to be shorting big tech or S&P. So right there. Yeah, so it seems to be a lot of people thinking it's default risk. Well, interestingly enough, the article I was reading, the reason that these rates, the 7.49 and the 4.97, the reason it's different. Now, the bank could take their money and go buy a 30-year government bond rate, right? Lock up the, let's say, $500,000 that they would put in a house, loan it out to you, and lock that up in a 30-year bond, make 4.97%. Or they can take it and lock it up in a fixed rate mortgage that you're going to pay back over time, right? Now, default risk is one factor, yes, but the biggest is prepayment risk. You're allowed to prepay on your mortgage, and you actually, this is full duration, 4.97%. This they get front loaded on the front end with a lot of interest, but if you start prepaying, they very quickly drop below this 4.97 if they're anywhere close. So the spread is adjusted to account for people prepaying the balance off their mortgage rate, or off their mortgage, not the rate, but off their mortgage. So it's payback risk. Yeah, they're stuck. So they don't know what's going to happen here, but they also don't know what's going to happen here. They've actually tried to cover their risk for prepayment and defaults, because they can't, if you prepay, if you pay it off before the time, then all of a sudden they got to figure out where to put that money to try to make the return. All right. You've just given them money and with no return. So, and as Goose says in the chat, in many cases, banks would do much better by having defaults where they can, reloan that money and they get the house and the appreciation on the house. So prepayment is like the biggest risk right now, and it's kind of a big risk. Like, what they don't want everybody to do right now is keep paying on those mortgages that they wrote down here at 3%. They really want people to give it up. So it's interesting. I've been trying to understand it more and more about the real risk to the market right here, because a lot of this is looking a lot like what we had right here, except it's not. All right, we're not seeing jobless. We're not seeing. It's an interesting situation. How prices are rising. We may be more like what we were back here, where we don't have the data, than we are like here. And we are seeing some financial stress, and we may go through an inflationary period, and we may see prices that eclipse this, even what we had back here. This was back when I was just a wee little dude and didn't understand the markets at all. I mean, just me just learning how to paper trade. I didn't have concepts of interest rates and, credit risk and stuff like that. So I'm trying to get myself educated and learned up so I can more intelligently talk to you about what's happening right here and how that might affect us. So I think we do have a potential coming crisis, especially when we look at the national debt, how it's eclipsed. The growth of the national debt has eclipsed, and it's just the U.S. national debt has eclipsed the growth rate of the GDP. And I had that chart up last week. I think it was, maybe it was week before last. And something to be cognizant of, that you can't borrow yourself out of debt. I mean, we all know that, but apparently as a society, we don't really understand that. I mean, we keep voting for free money, and then they have to borrow it. And the growth of the debt is, this is a risk. Now, do I see like the Israel situation as a big risk to the market? I mean, it's kind of a risk, but I think this is the bigger risk here, is the interest rates rising. They wrote a lot of money. A lot of money was written down here at what they call ZIRP, zero interest rate policy, right down, from the end of the great financial crisis in through the bottom of COVID. there were, all that money was wrapped up into commercial real estate, residential real estate, and long-term loans. And now we've got this rising rate. And this is the thing. This is where the problem comes for banks that nobody's really talking about, is the fact they've got all that money lent out there, and then they wrote instruments on that. They instrumentized the debt and then sold that. But now, why would a bank go buy your instrumentized debt at a low rate when they can go buy government bonds or even write new debt and get much higher rates? So now that money they lent out back here is a liability, and it's actually showing up on the books as a loss because they can't liquidate. Like if they try to liquidate and move those assets, those instruments, if you try to trade it to another bank, it's actually a liability at this point because there's no demand for it. Supply and demand. The demand is low, so the prices are put it in a loss. So now their assets, their instrumentized debt, is now underwater, and that means that a lot of banks are under collateralized. When they try to, when you look at the collateralization of their debt. And then when you extrapolate this out to a worldwide scale, there's around $70 trillion of this debt that has disappeared in the last, 15 months. It's just evaporated. $70 trillion worth of value of debt. This is the problem right now with raising the interest rates this fast. So what's the real risk right now? It's $70 trillion dropping off the bank, the rolls, dropping off that balance sheet. This is the worldwide banks. So this is the problem that they don't want to come to a head. Jerome Powell's not talking about it. Other central bankers not talking about it. They just kind of let's just ignore this right now. So that's the real risk out here. And if a domino falls or one of the foundational cards comes out, we could see this come apart. So is there a risk in the market that we go down in a big way? I mean, it could happen. It's not showing up in the price charts right now, and I think it may take more time, possibly out into 2024, 2025, maybe 2026, before we actually push this to the limits. All right, this is kind of like a slow-moving train. We all, I said we all saw it. We kind of saw, in retrospect, we all saw the housing crisis coming apart. All right, there are people like Gunlock and The Big Short. They all were on the front end of it. They saw this coming apart, but then it took years for it to develop. Right here, we can see it happening now. It's probably going to take 2024, 5, 6 for this to actually be a problem. And we may very well, this is kind of my big picture plan, we may very well see S&P 500 at all-time highs when this thing actually comes apart. And I think we're set for a new high this year right now. And we'll talk about it here in just a second. So let's pop over. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. I may never get another thing right again. This presentation is intended to be informational, educational, and fun, a little bit of entertainment. It's not a recommendation to buy or sell any financial instrument. Nothing, all right? Don't buy stocks, don't buy options, don't buy futures, don't buy cryptos, don't trade that stuff, don't sell them. All right, be careful. If you need personal financial advice, you got to hire and consult a financial advisor. I'm just a dude trying to get you ahead, all right? I'm not your financial advisor, but I do see things in the market, and I try to give you give you a heads up on what I see coming. So, short KRE right now, I don't think it's a wise choice, honestly. Like I said, I think we could see this going much higher, and this could last years. This irrationality of the debt markets could last years before the foundational card comes out. and we go down in a blaze of glory. There's the market open. So let's actually talk about what's moving today. The list was not huge, and here's the basic big picture. I tweeted this out yesterday, or X'd it out, or whatever you want to call it, on whatever you call Twitter, X these days. Posted it, I guess, on X, and I've shared it a little bit here and there. There's the key resistance. All right, we are up above the roadmap line. That was a big positive. We may come back down and retest it. Entirely possible. We may come up here and turn back down and retest it before we can break on out. Do I feel like we've done the pullback? Was this little guy the pullback? Probably not. We'll probably see something more like this one over here. All right, we tend to see, when we come off of bottoms, we tend to see big gnarly pullbacks. Like right there, you can see we came off the bottom and big gnarly pullback. All right, so we'll probably at some point see a big gnarly pullback. Just, is it from this level, or is it this level, or is it on higher? I'm not sure. We'll probably see a big gnarly pullback. Just be prepared for it. All right. That's like the final flush out. And but are we going to do this? Are we going to rally right up into this key resistance? Can we clear the resistance? If we do, we're probably coming right up here on the next move. 46.86. And this is just daily closes. It's kind of simplifying the chart a lot over what you actually see on the actual S&P 500 chart. But there we go. And then the 1618, 48.11, which, if we go back over here and look, we're going to be right up at an all-time high. All right. So be prepared, be cautious. No, it's not about being right or wrong, but when you are wrong, make sure you don't stay wrong. All right. If you're short in the market, be careful. If you're getting overly bullish right now, be careful. We can get that gnarly pullback. Be careful. All right. This is a pivotal kind of moment here in the next couple of weeks. Do I think this will be resolved today? Probably not. Do I think it'll be resolved in the coming days? Yeah, maybe, probably by the end of the month, we'll have this all figured out, whether we're going through the key resistance or we're going to mess around down here a little longer. All right. Right now, we've did the first thing. That was break above the roadmap line, which is very, very, very positive for going higher. Okay, the first little piece. There's more pieces of the puzzle. Once we get above the resistance, it looks pretty darn good to going way on up here. All right. Lots to talk about. And the list isn't even that long. S5FI coming back out of the bottom. This thing usually double dips. All right. Typically, we get a double dip before we go on up. So keep that in mind. All right. We see it. We see that double dip to a higher low before we go. It usually happens almost every time. This was epically low, came up, double dipped, and then took off. Epically low, came up, dipped, came up, double dipped, triple dipped, and then took off. Went above 80. So watch out. And the CTAs, the computerized trading algorithms, epically short. That means in almost every situation, they're going to be buying. What is extreme levels of buying and short covering results in popping above the 80 line. All right. ES overnight, just kind of holding. Things weren't overly spicy. They just kind of bobbing along. We do have a resistance zone right above us, built up from this consolidation on the way down. We pop up above that. That's yet another layer of confirmation that we're going on higher. Getting above 4,400 is kind of a key psychological level for ES. In Q, now ES, if you're unfamiliar, that's S&P 500 futures. They run right now running about as we can see, running roughly 30 points higher than the actual cash index. Why I use ES? It's because it gives me overnight data. The S&P, SPX right here stops trading. Maybe why don't you look at SPY? Because SPY is a derivative. All right, but SPX looking kind of bullish. We're getting up to some bullish levels here. Now, interesting of note yesterday. Look at this. I'll show you this real quick before I jump to something else. We came up and kind of stopped at the 1272 level. And that was much more evident on ES than it was on the cash index because of the overnight action. When we dipped right here, we came up and just parked right at the 1272 all night. And we want to see it. And that there's two paths that we usually see if we're going higher. One is that we come up and park on the 1272 and then reach up to the 1618. The other is we come up here, bounce back to the 100, and then bounce up to the 1618. It looks like we're parked at the 1272. That's showing strength, and we may rally up to the 1618. If we can break on through that, that leads us to higher prices. All right. Now, in Q, this is NASDAQ. If you want the QQQ price, divide by about 41 over here. If you don't know how to do that, you can do it with the tickers. You can just like NQ1 exclamation point divided by 41, and it'll roughly show you the QQQ prices. If you didn't know you could do that. And this is TradingView, by the way. So NQ showing strength too. And looks like we may be very well set to go higher. And look at the daily. That's showing a lot of strength right there. Still bullish bias. And the upside targets right now, 16,400 and 16,900. Resistance is right here at this point at the 618 level. 15,500 basically. 15,500. We get up through that, odds are we're going up to these highs. And that will probably put, and we're getting real close to all-time highs on NASDAQ at those levels. And we may see it bounce up to 1272, back to the 100, and then out to new highs. Russell. This one is a little different here. We are in this bottom zone, and we're below this resistance, kind of rejecting it a little bit already today. We need some serious strength to get back above this right here, where we had these big red candles. We need to, we're not just taking that back. It's like downside, upside down croquet hammer or whatever, long tails, 3 days. This one was kind of some strength, but we didn't get more strength than we had on the downside. So despite having what is 5 days in a row now on green days on Russell, this is IWM if you're unfamiliar, small caps, we're just not getting the strength that we need to indicate we're going to go right back higher. This one may flush one more time to a lower low. Cautious right here on Russell. The story is not as rosy as it is on ES and NQ. Oil. I did go long UCO. Announced that in Discord. I took a small position though. Only one contract UCO on oil. I still think we could dip back and test the roadmap line. We may even do a higher low situation or a double bottom situation. So I've got this. I'm keenly aware of the pattern on oil right now, and this can lead to a pop off where we go up to 98, possibly 103 on CL. That's the oil futures, and I think we're closer to a bottom than we are the top at this point. That's why I was willing to go in at least one contract, and I may add up to 5 or 10 total contracts if this proves it to me that we're going to go on higher. Now, if we just pop and rip, then my one contract will be good enough. So I don't chase it, but I look for confirmation that we're going to go higher. GC potentially reversing here. Nothing's told me this is the bottom yet, though. I'm just kind of holding the position I already have and waiting. We did the flush. That can be the bottom, but I need it to prove it to me at this point. And this little 3-4 day blip is not telling me that's the bottom yet. The roadmap line way up here at 1925, so we got a ways to go. Bitcoin showing continued kind of weakness a little bit. Not the most awesome thing that I wanted to see. And that may be the 1, 2. We may get a little deeper push into this roadmap line on the futures. And the spot market, we may see a dip below the roadmap line. 1, 2, 3. We may get a little flush right down there before we can go higher. Or if we break down below, back, significantly below these lows right here, this resistance, turn support now. We break below that, we might push on back down to a lower low than what we saw right here, or even right here. So we may go lower than the September low or the June low if we don't hold this kind of little area right in here. Get below that, looking like we might do that. Possibly go on down even further. Ethereum looking a little more bearish, though. That is not showing strength. Looks like it's probably going to dip down to that target area. I had to guess. Dollar continuing to retrace a little bit. We have support all the way down here, but excuse me, allergies getting me like crazy, making my nose all gunked up. That's a tough one right there. We did bounce off the resistance, but that's just a retrace, and we may push right on through up to the target area at 108. Still watching that 108 level. I feel like that's the key point where we're probably going to rally up to. And right now, this is kind of an echo of this prior pullback. Look right there, exactly the same size, finding support. It may do that extension one more time. That'll take it right up above the target zone. So watch for dollar to turn. That doesn't necessarily mean the stock market will pull back either. We could see the stock market and the dollar going higher at the same time. Now, what's moving today? What was making the list? ASML. Just churning here at the bottom. Not really breaking out higher, not really breaking down lower. This was a gap up. Could it pop above this spot? Yeah, I don't think it's bullish until we're back up with the roadmap line. And as long as we're down here, I'm below the roadmap line, I'm still holding this target down here at the 618 retrace. Now, it could be that this was the measured bounce, but it didn't just bounce. It kind of parked right here, and that's not showing strength for a bounce. Could it bounce? Yeah, it could, but that wasn't strength for a bounce. I like to see them touch and go, not touch and fart around. Hyatt Hotels. Almost said Hilton. It's Hyatt. Hyatt Hotels. Getting a little pop up, but that may retrace right back down. Be careful. This is kind of, sort of, a potential to break on up higher, 136, 147, but we need to be above this consolidation right here. And it left a big gap up there. So that makes it a kind of a tough buy for me right there. We really need to be above 122, fill that gap right there to set it up for 136 and 147. I probably wouldn't trade this, but there you go. MDGL, it's a pharmaceutical. Looking like top of the support box, giant gap all the way down there. We may bleed on down to the bottom of that box, fill the gap. LMT coming up short of the roadmap line. We need to see that get above to confirm that we're going to tilt this bullish. This isn't just a flash in the pan, retrace to the roadmap line before we push lower. NOC, Roadmap line, draw. Come on. There we go. Let's see, NOC is looking more bullish. We're pushed above this consolidation. We could see this rip on higher. Now, we are still stuck. There are still levels of resistance to break through. We're still stuck below those highs. What I would like to see is this to break on through. Probably come back, retest this, support, and then take on off. That level right there to this level down here. You can see that's right around the 618. And this would be right up around the 1272, 601. You might think I can kind of see these levels on the chart at this point without even drawing the fib lines, but there you go. COHR. Nice and crooked at the bottom. Beautiful. That looks pretty horrible. Horrible. Looks like we may extend lower down to 17. COHR. We're down. We got below this. We're getting a little pop today, but once we get below that 786 level, odds are we're going to break down, make a lower low. So as long as we're below the roadmap line, this is 17 would be the likely target there. Coin was seeing a little pop pre-market, but getting a little retrace now. I don't know. Crypto needs to turn to help this one go. We're just kind of sitting there at the 50% retrace of that move up. Fix that back a little bit. Yet again, like we came down, we looked like we were going to do a bullish go. We came down and made a lower low. Didn't get the enthusiasm. And now we've made this kind of downtrend. And we've been unable to break above it at this point. So I don't think this is just going to go without crypto turning, without seeing Bitcoin actually rallying. That's just kind of my feeling on it, that it's unlikely to just get sparky by itself. ALB made the extension down there. This is one this is the pattern that I'm always watching and warning about. When we rejected that right there, look, we got the 1272. Now we may rally back up. We could rally all the way to the roadmap line. If we hold the roadmap line again and go down, then we'll look for another extension. But right now, this is not turning, despite them being a big lithium producer in the US and partnering with XOM. It's still looking pretty bearish. Like we couldn't break above the downtrend. So at this point, that kind of wrecked that potential, and we're still stuck looking for the bottom. Now, whenever this completes, do the overlap, this looks like it'll probably violently reverse, but right now, that's not the bottom so far. Well, it could be the bottom, but it hasn't indicated that it has found the bottom yet. Let's put it that way. RMD, you can, I talked about this a couple of days ago, and this is a victim of GLP-1 drugs. Like demand for CPAP machines could be significantly lower if we can fix all the fat people at the source, fix the fat. So that's future sales potentially affected by GLP-1 drugs. That's like Ozempic, Wegovy, all those kind of things by Lilly and NVO, Nora Novardisk. EA, ouch. I bet that's the wrong EA. I bet it was supposed to be this one. Yeah. That EA looked pretty horrible. This EA, nice pop, but look at the chart. It's a big sideways choppy mess. Like, why do you want to get involved in that? That's a downtrend, and we're just chopping in the trend. Look, for 2 years now. Choppy, sideways, hot mess. Don't mess with that one. I wouldn't mess with that one. You can mess with it all you want. I'm not telling you what to do. But from my standpoint, why would you want to mess with something that's just chopping? I mean, there's way better ways to make money. EL, Estee Lauder, probably coming down to 126, 126. Probably. Can it go lower? Sure, it can go lower, but it's probably heading down to this 126 area. SMX, nice little pop, but that's still very bearish. Oh my gosh. Like dumpster fire bearish. And low price stuff doesn't always follow. I mean, wow, that one. Look at that fall. It has the reverse split in here. I knew it was a reverse split because that's the only thing that makes stocks go to 800 right up here. So that one's probably going out of business. AKRO. Yeah, dumpster fire. Yeah, I should have played the dumpster fire. I go back and play it. And this right here, complete dumpster fire. Don't bet on that. You could day trade it, sure, make a couple bucks day trading, but for gosh sakes, that's gambling. Yeah, no bueno. No bueno. AKRO, pharmaceutical, be careful, biotech, pharmaceutical stuff. Drug approvals, denials can just whack that thing. And we're seeing some kind of bad news because that thing dropped from 48 to 17. So they probably got some bad news on a drug trial, would be my guess there. VTYX, another bioscience, pharmaceutical, be careful there. Getting whacked. Money's getting expensive. Biotech's going to have a hard time while interest rates are high. SWKS. I mean, the stakes are huge. You could, spend several hundred million and come up with something that's worth billions. But that's an expensive game when the FDA can just be like, we don't like your thing. It's done. Anyway, SWKS didn't break higher. That at the point has firmed up this resistance level and looks like we may go back down for another visit down deeper into the retrace. Looks like a 3-wave up and makes it somewhat likely we'll see a lower low. ETNB, another biotech, pharmaceutical, biopharma. Ouch. Support down here if it follows the patterns. That's got a couple things working against it. Low price in $10, below $10 or right at $10. And it's a biopharma, so be careful there. Also, these tend to make the list a lot, these biopharmas, but I don't mess with them. I just don't. Like, they're fun to talk about and look at the crazy chart, but I don't touch them. PD, pager duty. Is that like actual pagers? Are you kidding me? That looks pretty bad. That's borderline dumpster fire right there. I mean, looks like we could go down to 16. And I grabbed the last few of these off of the StockTwits. Well, that made the downside target. I got that one and reached down for the extension and almost the super extension. Could it make a bottom here? Yeah, it very well could. Did it do this bullish thing? No, it didn't do that bullish thing. So we've got one heck of a retrace on Pepsi. This is another. So right now there's a popular concept to attack things that the GLP-1 drugs may affect. It's kind of like hey, people might buy less Pepsi. They might buy less Coke. They might buy less fatty foods from, Kraft and prepackaged stuff. They might buy less Domino's. They might buy less Pizza Hut. I mean, they might. We don't know yet. They might buy less McDonald's. I mean, they definitely do, but is that going to affect their profits? Is McDonald's definitely going down the toilet because of the GLP-1 drugs? All right. If I've said anything that you appreciate or you like today, please smash the like button and share it with somebody, as PD reminds us in the chat. But, are all these getting overly punished? All right. That's, will there be a buying opportunity down here somewhere? Probably. All right. Is it now? I don't know. DPZ kind of performing a lot better than some of those other ones. You know, even CMG, they're thinking that people gonna shop at Chipotle less. I'm not a frequenter of Chipotle, but you know, I don't know. Um, I do know my, as Kimberly calls him, my old man best friend. He said we were sitting on his front porch 2 weeks ago. He was like, you know, since I've been on this, I think he's on Ozempic. He's like, since I've been on this stuff, I just don't like the taste of soda anymore. He's like, I appreciate water now. He's like, you brought your big old water cup. He's like, I kind of agree with you. I have a big old 40-ounce Stanley water cup I carry around. So, he was like, I haven't even been buying Dr. Pepper or anything anymore. So he used to drink Mountain Dews and Dr. Peppers, I think it was. So he hadn't been drinking that at all. Is that indicative of the bigger trend that'll go on with the GLP-1 drugs? I don't know. So, but that's what you're seeing hit right here. Even Walmart getting the hit a little bit, but you know, Walmart saying that they're spending on junk food categories. You know, they were buying less calorically, but they were spending the same amount of money if you read what they actually said. So, and that was just aggregating the data since they have a drug, you know, since they have a pharmacy, Walmart pharmacies, for the people that buy Ozempic and, you know, the GLP-1 drugs, Wegovy, Ozempic, you know, the other ones, those people are calorically buying less caloric value, like their cart, you know, when they look at what they bought, they're buying less calories, but they're spending about the same amount of money. So maybe they're making smarter choices as to what they buy. It's kind of an interesting, it's interesting that, you know, you control the appetite and you buy better food. Interesting. Anyway, Walmart, that's a roadmap bounce right there, potentially. Right down there, get back above about 160, probably heading up to 169, potentially 174. Unity changing up their software license stuff and coming up short of the target so far. We may see one more push down. They got a PR nightmare. I mean, attacking their developers to try to make more money, not exactly the best policy. Maybe they should have rolled that out a little less knee-jerk, a little less rug pull. They're definitely got that that reaction going on there. And EDU showing some amazing strength. And next target up, probably 69. There you go. JT's bias for the day. Continued bullishness. We have some stuff to work through to keep her going, keep her at her. Got some stuff to work through. We didn't exactly do all this deep retrace that I thought we might. Getting the confirmation. We're, you know, this moving above this high was the initial thing I wanted to see. That was the initial move I needed to see. That level right there, we did it. Now we've got higher resistance to get through. I have this gap fill up here that may prove to be some resistance. And we may go up there, fill that gap, and then turn down and come back and visit the roadmap line. So there you go. I have a request show. If you want request show coming at 5 p.m. Come see me. Make sure you're subscribed. Hit the button over there. Make sure you hit the bell with the notifications so you know when I go live at 5 p.m. Eastern. And take your request for at least 30 minutes. We call it 30 MA, 30 minutes of awesome. 30 moving average, whatever you want to call it. 30 minutes of awesome. I'll be back with you 5 p.m. Eastern. And make sure you come because it takes your request to make the show. So if you don't come and make requests, then I don't have anything to talk about. Hopefully, I'll see you then. Otherwise, I'll be in Discord. If you want to come hang out with me in Discord, or get more information, link is in the description. It's like $5 for 3 months. I don't know how to make it cheaper than that. So I'll see you later. Have a great day, everybody. Remember, the account you save